أحلى. Good evening. Welcome to Good evening. Welcome to our seminar this evening on homeownership, affordable homeownership, turning uncertainty into opportunity, presented by Leadership Prince William class of 2021. Home ownership plays an important role in building vibrant communities. It is something I witness every day as a local realtor serving Prince William County and the wider Northern Virginia area. Not only does home ownership build vibrant communities, it also provides security and opportunity to build wealth. My name's Irene Franklin, your moderator for this evening. I'm originally from the UK. I relocated to Northern Virginia 6 years ago with my husband and children through a military relocation. My husband was in the Army. As a realtor, I have seen firsthand the difference that homeownership means to people, and anyone who lives in Northern Virginia and works here understands the challenges of getting affordable housing, the lack of inventory, and skyrocketing house prices has also been made worse by the impacts of the COVID-19 pandemic. This evening, we will explore various options to help local residents become homeowners themselves. I'd like to take a moment to set some expectations for the evening. Please submit your questions by using the chat box. You may send your questions directly to all panelists or to all panelists and attendees. That way, our tech support can help to ensure that your question gets to the right place. Please do not use the raise hand function. If you need language interpretation, be sure to click on the interpretation box at the bottom of your screen. If you have joined us, but your internet service is spotty or unpredictable, please know that this is being recorded and is live streaming on the Leadership Prince William channel on YouTube and Facebook as well. I would now like to introduce you to Andrea Money, the Executive Director of Leadership Prince William. Thank you.
All right, just 1 second. I wanted to just kick things off this evening by thanking the Leadership Prince William mission sponsors. They are Youth for Tomorrow, Centera Northern Virginia Medical Center, Whitlock Wealth Management, Dominion Energy, Tina and Juan Laguna, Loveless Porter Architects, Prince William Living Magazine, Compton and Dooling Attorneys at Law, and First Light Home Care of Woodbridge. Those businesses support Leadership Prince William year-round. And in addition to those businesses, this series of community conversations has been funded and made possible by a grant from the Community Foundation of Northern Virginia. They, over the summer of 2020, came up with a grant fund called Build Back Dream Forward. And it is aimed at creating these community conversations in various segments of Northern Virginia. They asked organizations like ours, volunteer organizations, churches, to write a grant proposal and then to host these kind of conversations around systemic racism and the impact of COVID on communities of color. So the Leadership Prince William class of 2021 put their heads together and they came up with this series based on affordable housing and the history that brought us to this place where we have kind of some impossible housing situations. Although I think we're going to learn tonight that these situations are not impossible if we are able to put our heads together and come together as a community. I wanted to also let everyone know we will be hosting a third community conversation on Saturday, June 5th at 10 o'clock a.m. We will send you information about that, and we will put that up on the screen at the end of this session. But at this time, I am going to let Irene have the floor once again, and we'll get this thing going. Thank you.
Thank you, Andrea. So this evening, we're very honored to be joined by a distinguished group of panelists that are market experts in our region. We're going to begin with the first part of our presentation, which focuses on resources that help make homeownership possible for low to moderate income individuals and their families. We will begin with the presentation from each of our panelists, followed by a brief question and answer sessions. Please add any questions that you may have in the chat session, and we will answer them at the end of the presentations. Following this section, we will discuss options to foreclosures with representatives from Legal Services of Northern Virginia. Our first panelist is Angela Bassett from the Prince William Office of Housing. Angela is here to discuss the first-time homebuyer program offered by the county. Thank you.
Thank you for the introduction. My name is Angela Bassett. I go by Angie, so people don't confuse me with the famous actress. I do administer the first-time homebuyer program for Prince William County. And I think it's the best program around, at least in Northern Virginia, because we do have several of the other local jurisdictions that have their own variations on home ownership. But in Prince William County, the program is offered to low to moderate income families or individuals that live in Prince William County or work in Prince William County. And the property they purchase must be located in Prince William County as well. The majority of our clients for the past year have been minorities. I don't know if the word's gotten, word of mouth. That seems to be the biggest, the most successful way that we've gotten our clients in. We do have a few requirements: minimum credit score of 640, and residency here in Prince William or working in Prince William, and income based on family size is cannot exceed HUD's limits. The program is federally funded. We do not receive any county money for this program, so we have to follow HUD's rules and regulations in regards to that. Prior to applying, we do require that our home buyers and applicants complete 3 educational sessions. All 3 are offered through the Virginia Cooperative Extension in Prince William County. One is a virtual 2-hour class because they're not offering classes anymore due to COVID. So everything is virtual or by phone. And we are accepting online certificates where we did not accept in the past.
Angela, I do apologize to interject 1 second, please. Carmen, would you please just give us the introduction in Spanish as well, please? Thank you. Thank you, Angie. Sorry about that.
Oh, no problem. The way that the program works, qualified applicants, if their eligibility is approved, they are eligible for a 20 or 30% down payment. An additional 3% is added for closing costs. The sales price limit has increased effective June 1st to $361,000. Again, that limit is set forth by HUD. They consider that to be moderate housing. And in this tough market, it's hard to find a property for that without having 10 other bidders, trying to purchase the same home. The funds that we provide are secured by a 30-year deferred loan. It's a second deed of trust with 0% interest, and there are no monthly payments. If the buyers keep the property as their primary residence for 30 years, then the loan is forgiven at that time. Should they decide to sell the property within the 30-year period, then they pay the loan back with the proceeds of the sale. At the present time, we are also offering the Emergency Housing Assistance Program through COVID-related funding, and we still have several million. We were accepting for rent, but now we're only accepting applications for mortgage and homeowners because the state is offering only to the renters. That can be found on the county's website. It's www.pwc.gov/housing. And you can find all the programs we have. Unfortunately, we don't have any affordable rentals. We don't own them, but I certainly can pass along information as to some of the local nonprofits that do have those types of properties. Feel free to, my name and number is on the website, and I appreciate anyone to call me anytime with questions. I'd be happy to email information to you or your clients or your friends or your family. We do just want to get the word out because we have plenty of funds available. So far this year, we've received over $600,000 in loan repayments. So, you know, we keep getting more money than faster than we can spend it, which is a good thing because we have plenty. There's no waiting list at this time. So if anyone has any questions.
I believe we do have one question.
Okay.
Thank you. The question is from the chat is that does the applicant need to live in Prince William County and work as well?
Yeah, they either need to live here or work here, one or the other. They don't have to do both, but they either have to be a resident or they have to be working full-time here.
And is there any income restrictions on the program?
There are income restrictions. As I mentioned, the program is federally funded, so we follow HUD's guidelines. Unfortunately, the income is a little lower than VHDA's limits for their programs. We do post the income chart on our website, and it's based on the number of persons in the household. 80% of the area median income as the maximum amount of a family's gross household income. If they're above that amount, and I'd rather have someone call me and confirm that they're, over the income amount as opposed to just say, oh, wow, I make too much. Because I have had people that they really didn't make that much. They just thought they did. It does happen. So I welcome phone calls and questions, emails.
Great. We do have another couple more questions. How long does it generally take for the application process to go through from start to end? That's dependent upon the applicant. We do require that they complete the 3 educational sessions. One of the first session is a 2-hour class, and it's offered twice per month. The second is a one-on-one counseling session. So that's when, they schedule with one of the counselors at the cooperative extension. And then the third is an online course. It used to be the 6-hour home ownership seminar held on Saturdays. Now we're accepting the online certificates, and it's a 6-hour online course, and that's done, at their pace. They can take it and then come back and do a little bit more if they don't want to sit there for 6 hours and to go through. So it's really up to the applicant. Once they've completed the 3 classes and send me all their paperwork, applications and paperwork are reviewed typically, within the same week. And if there's anything missing, so it really depends upon the applicant. I've had people that applied within a 2-week time frame, that as soon as they took that first class, then they had all the other stuff and then sent their application in. So, they were approved within a month, probably in 3 weeks, but, so really it depends on the applicant and how motivated they are, to get their paperwork in. Okay. And we also have one more question. Is it offered in Spanish?
Yes. And actually the classes that we require are offered, they're offered in many languages. We just, sometimes for languages other than Spanish, we do have to get an interpreter. So it may not be exactly on the date of the class. They would have a, scheduled interpreter be there. But yes, they will accommodate. They also have someone who signs.
Wonderful. Thank you, Angie, for that. Thank you.
Thank you.
Our next presenter I have had the pleasure of working with is Regina Pinckney from Virginia Housing, and she'll take us through the programs that Virginia Housing has to offer Virginians. Thank you.
Irene, thank you for having me here tonight to talk about one of my favorite things, affordable home ownership. And I'm going to try to share my screen because I have a little presentation here. Okay, so my name is Regina Pinckney, and I'm from Virginia Housing. We are the housing finance agency for the state of Virginia, and we are a nonprofit organization. I'm telling you all that first because I'm going to say some things that sound too good to be true. And I want you to know, if it sounds too good to be true, it isn't, and it's because we're a nonprofit. Our whole mission, our whole reason for being is to be of service to Virginians, to assist in the formation and attainment of affordable, healthy housing. Now, I'm from the homeownership division because that's our focus today, but we do have a rental division. And if you want to find out more about that, you can check out our website at virginiahousing.com and then click renters at the top in green. Now on to homeownership. You may already know about us because you may have heard of VHDA. And VHDA is our former name. We just recently rebranded and changed our name to Virginia Housing to be a little more accessible to folks. But we were created in 1972 by the Virginia General Assembly. However, we are not a state agency. We don't receive any federal or state dollars to pursue our mission of healthy, stable, affordable housing in Virginia. We make our money by selling taxable and tax-exempt mortgage bonds, as well as selling mortgages that we bundle and sell to Ginnie Mae, Fannie Mae, and now Freddie Mac. So that's where we get our money. And what do we do with our money? We provide mortgages. Our mortgages are, we provide mortgages, but they're structured to overcome the hurdles of homeownership. And what are those hurdles? Down payment, right? That's the biggest one. A lot of people still think you need a 20% down payment. You don't. You could buy a home today as a first-time home buyer with 0 down payment. Don't confuse that with no money out of pocket. That's no down payment on the cost of the home, but there's still closing costs to be dealt with. Now, I'm going to talk to you about some things that can even help mitigate the impact of closing costs. And then we promote the use of our programs through sales trainings and events like this, where we get to share what we do and how we do it with consumers to let them know what's possible. So the first thing that you want to think about if you're considering a Virginia housing loan is, am I eligible? Now, most people, when they think about buying a home, they say, oh, I don't have money saved. I don't make enough money. My credit's not perfect. I can't buy a home. With our programs, you don't have to worry about those things first. We're going to cover the basics first. Are you a first-time home buyer? Our definition of a first-time home buyer is very unique because one can own a home and still be a first-time home buyer. So our definition is if one has not owned a home that they've lived in the last 3 years. So perhaps you're separated or approaching a divorce, but your name is still on the marital home, but you haven't lived in it for 3 years, you're a first-time home buyer. Now, I told you about one exception. There are others. If you own rental properties, but you've not lived in any of them in the last 3 years, you're a first-time home buyer. If you own a manufactured home, or what some might call a double wide. If you own a double wide, you can own it, you can own the land, but if it's not permanently affixed to the land, you're a first-time home buyer. And we can help you finance building your own home or buying your own home in different regions of the state. We have a pilot program for construction for manufactured and modular housing in Southwestern Virginia. So that's something to remember. And then we have a couple of loan programs, our conventional loans, that don't require you to be a first-time home buyer at all. So you can have 3% down payment and pay your closing costs and move forward. Once, however, you add a specialty program to those conventional loans, they do become first-time home buyer loans. So how do you become eligible? One, you have to be a first-time home buyer. Two, we have maximum income limits. We do not have a minimum income limit. So the market, what's out there on the market and your income and the way it's structured, is what determines what kind of home you can buy. But we only have maximum income limits. And let me show you those. We have maximum income limits for the household, for the borrower, and then we also have a sales price limit. So if you look at the first row, Washington, Arlington, Alexandria, you'll see that the limits are very generous. The standard income limits are when the only money you get from us is borrowed. And that is the maximum income for fewer people, 138,200. So one person can make that much and do a loan with us, no problems. If you look at the other category under 2 or fewer people, you see our grant income limits, which are substantially lower, but still very high for a grant. And that limit is for 2 or fewer, 110,500 or 129,000 for a house of 3 or more. So let's talk about the benefits of working with Virginia Housing. In my previous life, 15 years before coming to Virginia Housing, I was a loan officer. And I actually became a loan officer because of Virginia Housing products. I saw another loan officer doing the loans and I saw their clients leaving happy, and I wanted to make people happy too. So I learned how to do the loans. And what I found as an originator and now working at Virginia Housing is that one of the things that makes our product so powerful is choice. When you have more options, there are more ways to say yes, right? And that's what we want when we're trying to buy a home. We want a yes. So not only do we offer conventional loans, we have a conventional loan with no mortgage insurance. We have government loans for folks in rural areas, for loans for veterans, FHA loans, which are federally insured. And then we also have our agency loans. So let's talk about the good stuff, the free money. That's my favorite part. So we have a fully forgiven grant for down payment for those of you who use loan programs that require one. We have a fully forgiven closing cost grant for those of you who use a government loan that already offers 100% financing, like a VA loan for veterans or a USDA loan. And then we have, for those who are not eligible for our grants, perhaps because they make higher income, they can borrow their down payment from us. So if the conventional loan requires a 3% down payment, they would have a 97% first loan and a 3% second loan from us, both at the same interest rate, at the same terms, with no prepayment penalty. And then to top it off, we have mortgage credit certificates. Our mortgage credit certificate, now I'm going to stress this because it's important. If you are a first-time home buyer and you are approaching the closing table, meaning you're going to go to settlement in 2 or 3 weeks, talk to your lender, if not sooner, and ask them about getting you the mortgage credit certificate. They are eligible to Virginians who use Virginia Housing financing for free. So you would just tell your lender, one-stop shopping. I would like the Virginia Housing combo, the first mortgage, the grant or the second trust, and the mortgage credit certificate. And it's important to ask for that prior to closing, because if you close before you ask for it and we give you a commitment for it, you're no longer eligible to get one ever until you're a first-time home buyer again. And that's not our code, that's IRS code. And then we have a program called Spark. And Spark is a 1% discount on first-time homebuyer loans with Virginia Housing. Now, Spark is used in different regions. For example, Prince William County, Angie Bassett's department, they have Spark and Spark allocation, where not only can you benefit from a huge down payment in the form of a silent second, but then you get to take the interest rate down by 1% for free. That's amazing. That turns so many no's to yes. And you can do that all with working with Prince William and Virginia Housing and your Virginia Housing approved lender. Now, to give you the impact of Spark, if you had a $350,000 sales price on your home and you used the 1% Spark, you as the homeowner would save $65,000 over the life of your loan over your neighbor with the same house and the same conventional loan with 3% down, but no Spark. That is a huge savings. And then when you add our grant to it and you add the after closing benefits of the MCC, you continue to compound your savings. So here's what the MCC does. It takes 10% of the mortgage interest you pay every year and converts it to a dollar for dollar federal income tax credit, which is much more powerful than the deduction. If you itemize, you still get to deduct 90% of the interest you pay, but you still have that dollar for dollar tax credit that you can use. And what do you do if you don't itemize? What if you're better off using the standard deductions? Well, with the mortgage credit certificate, you still get to use that 10%. So if you pay $10,000 in interest, you get to deduct 90% and then take a $1,000 tax credit or the standard deduction and a $1,000 tax credit. And you can do that every year that you live in the home for the life of the loan, the full 30 years term. This program is available to all borrowers who do VHDA loans, or, oh, I said it, I haven't made that slip in a long time, Virginia housing loans, right? If you're doing a Virginia housing loan, you can add the mortgage credit certificate for free, just ask. And if you're not doing a Virginia housing loan for some reason, and I don't know why you would, but just say you do, if you're still a first-time home buyer and you're working with a Virginia housing approved lender, he or she can give you the MCC or sell you the MCC certificate for a one-time fee of $750, which is quite a deal considering it's going to give you a tax credit over the course of the next 30 years. And then here's the slide on Spark. And Spark is very simple. No money changes hands. It's just like your rate magically goes down from 3.5% to 2.5% because your loan officer took the time to reach out to Angie Bassett and get you pre-qualified for using Spark and the down payment assistance program with Prince William. And I will say that other jurisdictions do have Spark. And here's just a sample of some of the folks who have had Spark in the previous year. Fairfax, Arlington, Alexandria, Loudoun County, and lots of nonprofits throughout the state have Spark funds. The benefits of using Virginia Housing beyond those that I've shared with you is one that I always loved as a lender, and that was the customer service. Virginia Housing services all of their loans. So when you close your loan with us, you know where you're going to make your payment. Even though you went to an approved lender, when it's time for you to make your payments, you're going to make them to Virginia Housing. And that means that should anything go wrong, should you need assistance in keeping your home and staying in your home, especially at a time like now with COVID, we're here for you. You can call us. You don't have to deal with a national company and wait times and confusion. You have a not-for-profit organization that's ready to help you during that time as well. I don't know if there are any questions for me, but I'm happy to answer.
Regina, we do have a few questions for you from the chat, and I will be saving those till after Brandon's presentation.
Thank you.
Thank you so much for that.
My pleasure.
Thank you. Thank you, Regina. So our final presenter for this first part of the session is Brandon J. Thorpe with Visionary Lending, who will be sharing with us different financing options for low to moderate income individuals. Thank you, Brandon.
All right, thank you so much for this opportunity. I feel like Regina cornered the market and Angela cornered the market. You both did a fantastic job in presenting.
I'm in your corner, Brandon. You got this.
Oh, I appreciate that. So there are many different loan options generally that are available to people. It doesn't really matter what your income level is. To be perfectly honest, there's a wide range. There are conventional loans, which are commonly known as Fannie Mae and Freddie Mac. There's the FHA, which is the Federal Housing Administration. There are VA loans for veterans. And then there's the USDA, the United States Department of Agriculture, which also offers loans with no money down and very low private mortgage insurance. It really does depend upon what your individual situation is. There was a comment in the chat just a few minutes ago. There was someone who said that they're a teacher and they had, potential challenges and issues with regards to their debt to income ratio. So if I'm going to take a minute or two to explain what that is, because I'm a mortgage broker, okay? So I deal directly with individuals every single day in terms of directly qualifying them for loans. So that means we look at credit, income, assets, and the entire landscape, the entire foundation upon which someone stands when they want to qualify for a home. So you'll have programs like Virginia Housing, you have the programs that Prince William County offers, and you have a whole litany of other types of programs. When it comes to debt to income ratio, that is extremely important because that looks directly at the amount of money that an individual makes per month versus what their liabilities will be, what will be their debts, including that new mortgage payment that they're looking to get, okay? So different programs have some restrictions on that, which may, for individuals who don't make as much money or may make a certain amount of money but have a certain amount of debt, it may not help them to qualify. So, what we're talking about tonight primarily are many of the programs with regards to down payment assistance. There are down payment assistance programs which I use regularly that are nationwide. So it has more flexibility for sure. But again, if you are here in Northern Virginia, I think first and foremost, you do want to take advantage of the programs that are native to this area, in particular with what Ms. Bassett had shared earlier, because that's a fantastic program. And really the word needs to get out there so people can take advantage of that, as well as Virginia Housing. And I've known Regina for a couple of years now. That's an amazing program as well. But they're not the only programs that are available. And there are individuals who may not make as much money, but they may have money in their 401k or their TSP, their thrift savings plan, or they're able to get gift funds from a family member. So they may have some money, albeit minimal, either 3% down, 3.5% down, or USDA, no money down. For sure, there are different varieties of loans that exist for first-time home buyers. There are programs where if you currently own a home, okay, and you want to rent it out and buy another home, that you can have 3% and put down on a new property. That's called a Fannie Mae. There's the Freddie Mac Home Possible and the Fannie Mae Home Ready. Those loans are fantastic. They're beautiful loans. So it really does depend upon the individual's circumstance and for them to get qualified for the home that they want to purchase. And what's most important when you're doing this is looking at what your budget is, looking at your timeline, and really working with your real estate professional to set the proper expectations so that you go into the home search, not with a blindfold on or not being caught by surprise by what's going on. So for example, I think it was mentioned earlier with what's going on in this market. Listen, here in the DMV, the market is crazy. It's absolutely insane with regards to the supply and demand curve, right? And the amount of scarcity that is taking place with regards to homes that are coming on the market. As a result, okay, sellers have all the leverage, which means they have all the control. They have all the options available to them because probably without looking at any specific statistics, for every home in the Northern Virginia area, DC metro area, hey, Prince George's County, Montgomery County, for every home that's going on the market, there are probably anywhere between 5 to 10 offers that are that are being placed on those homes. As a result, okay, and we're not going to get into this too much, but it is abnormally driving up the market. And since there are so many offers on those homes, it is pushing out the first-time home buyers, because the programs that we're talking about tonight are amazing programs, for sure, 100%. However, the challenge is in the face of having many other buyers out there who are not first-time home buyers and who have additional funds. They have an additional $10,000, $20,000, $30,000, $40,000 to offer on the same property, well, then it puts our first-time buyers at a disadvantage. But when the market normalizes, these programs are amazing to give people the opportunity, whether to be the first homeowner in their family or within a generation, or the second homeowner, and to really be able to use that real estate to help build what's called equity, okay? And equity is actual ownership. It's the difference between what your property is worth and how much you owe. That difference is your equity, it's your ownership. And that's what people need so that they can pass that down from generation to generation. Not only pass down that equity, but pass down the knowledge, pass down the experience, pass down the lessons, so that those, even though on paper your W-2 or your taxes may not show that you're a high earner, you might be at that 80% AMI, area median income or less, but it definitely should not disqualify you for any means or any reason to be able to have the joy and the pride of home ownership. A lot of the programs that I've mentioned earlier, they do have different FICO score. FICO is your credit score. They have different thresholds and they have different minimums there as well. So during COVID, probably from March of 2020 through probably February of this year, a lot of the loan programs got much tighter because of the economy was tighter. But now the economy is opening up more. So with FHA, for example, there are several lenders that are allowing buyers to purchase homes with a 580 minimum credit score with 3.5% down. Okay, it's possible. Okay, for sure. It is advised to have a higher credit score for sure, because it increases your probability of getting your loan approved. Okay, but even for conventional loans, your score needs to be just in the mid sixes, or for VA loans, you can also have lower credit scores along with the USDA. So basically, you know, I did not want to necessarily have a slide presentation, although I greatly appreciate them. I'm definitely open for some Q&A if there is any Q&A, but the way that I approach things is, you know, we look at the individual family or the individual potential buyer, and we look at their specific situation. Again, what are their expectations? Where do they want to live? What's their timeline? What's their budget? How much money do or don't they have? Do they have money for closing fees? Or do they not have money for closing fees? You may be able to get your down payment covered, but if the seller's not going to give you a certain amount of money for closing costs, then you have to properly plan for that, okay? You have to have money typically for an appraisal, for a home inspection. So it's really about educating our buyers, educating our potential clients so that they are fully equipped and fully aware and ready to go when it comes time for them to go and purchase a home. And so that's what we do. That's what Virginia Housing does. That's what the programs in Prince William County do. Very grateful because there are many people who are in need and the resources are there and available for them. So thank you. I'm not sure if there were any questions in the chat or if anything else that you would like for me specifically to address.
Thank you, Brandon. We do have some questions in the
Absolutely.
chat for you.
Yes.
The first one is, when do you expect the market to stabilize, not come to the pre-pandemic normal?
Okay. The first thing that I'm going to do is I'm going to consult my crystal ball. Okay. Okay. No, but in all seriousness, honestly, that's very hard to say, because here's the thing. You would have thought that, you know, post-COVID, that people would not necessarily want to get out there and purchase a home because of health reasons, and some people lost their jobs and the economy wasn't as good. Let me tell you, demand for homes did not diminish at all. In fact, demand has probably increased for various reasons, but one of the reasons might be because people were sitting at home, cooped up, and realized, I need to own a home. I need to have bigger space. I need to have my own home office now because I'm teleworking. Or something that a lot of people aren't talking about, but I'll put it out there, is that many people who had their mortgage in forbearance for a year, saved up all that money, and now they can go and put it as a down payment on a property. There are many different factors that have contributed and continue to contribute to the demand. I think that specifically here in the DMV, it has traditionally been a very strong market because of the economy here, because of the government, because of contracting work, because of the military, just because of the overall, employment opportunities here. So if I were to take a guess, I would probably say probably at least a year or so,
Okay,
to be very honest with you. So I know that was a bit of a long-winded answer, but I wanted to also give some detail behind it.
thank you. And the same question to Angie and to Regina, please, about how you see the market going.
Well, my fingers are crossed that there's some improvement. I have several families looking now, and every time they write a contract, there's someone else coming. There are a lot of cash offers. So I'm thinking there might be investors that are buying up all these properties. But it depends on the area. If they purchase down maybe in Triangle, a little further, the further you get from DC, the prices go down. And that seems to be an area where there's not as much competition going on. And I wanted to expound on the Spark funds for Prince William County. The 1% interest rate reduction is available if the family purchases a home within a designated census tract. Several years ago, when the market blew up, there were a lot of foreclosures. Prince William County noticed certain areas were hit harder than others. So if someone purchases a property in one of those areas, then they're eligible for the Spark money.
Thank you. Regina?
Well, like Brandon, I don't have a crystal ball. One of the things that I think is encouraging is all of the aid that's going out to landlords, renters, and homeowners to prevent a bubble burst like we experienced in 2008. I think that for the most part, we learned our lesson in 2008, and now we have rent relief programs. Landlords can get back rent and forward rent. We have a homeownership program in the state of Virginia that's going to help folks with their mortgages through 2025. So there's a lot of thought going into this. So how that's going to affect the market after COVID, I think it's going to create a more stable market after COVID. I think after a lot of the relief goes away, households will be more stable because they've had support during that time. And so we might not see the foreclosures and things that we think we might see. But that's really my opinion.
Thank you. Thank you. And this is a question for open to all panelists. What are lenders currently doing to reach and encourage communities of color, marginalized individuals to opt for homeownership?
I'll let the ladies go first and then.
Okay. Angie, may I?
Yes, absolutely.
Okay. Well, I can't speak for lenders, but I can speak for Virginia Housing because that's kind of what they pay me to do. So what we're doing is we've hired a director who's on our leadership board, who is a director of diversity, equity, and inclusion. And that's very important that we talk about all three of those things, diversity. And you can't say diversity is just brown people, because you can put a bunch of brown people in the same room, and even brown people who are descendants from Africa, there still is diversity. They might be from Haiti, they may be from Jamaica, they may be from Washington, D.C. So there's still diversity there. And then equity, kind of looking for ways to heal the scars that have been inflicted on people of color and people who have been marginalized in the country, who have been deprived of access. So what I love about Adrienne Whitaker is her name, our new director of DEI, is that her position is not only an outward facing position, but it's an inward facing position. She's looking at how we operate, how we treat people, how our employees are treated and things like that. And then intensely on education. In addition to that, we have been partnering with NAACP to do webinar events. We have partnered with the National Association of Real Estate Brokers, also called NAREB. They are the first, Brandon, help me out. Tell them about NAREB. He's a specialist on NAREB, but it's an amazing
They're the nation's
organization.
oldest trade association, right? They were
Yes.
formed, I think, in 1947. Yeah.
And they were formed because they were legally prohibited from becoming realtors. The National Association of Realtors would not let Black people participate. And so NAREB was created, and they are a force throughout the country for decades now in advancing democracy and housing. So we're excited to be partnered with them, as well as the National Association of Minority Mortgage Bankers of America.
Thank you.
But I'm going to stop.
Thank you, Regina.
You're welcome.
And I have a question for both you and Angela in respect to debt to income ratios. Is the debt to income ratio an issue? You know, and also are they impacted? How are they impacted with the debt to income ratio situation? That was a question from the chat for both of you.
Okay, for Prince William County, the ratios are 30-40. But I do want to explain that Prince William County's income calculations may be higher and typically are higher than the loan officer or the lender's calculation. The reason being, some folks are paid overtime or differential pay. So we would take an average and average that out and project forward that they're going to do it again next year. Whereas lenders, the first trust lender may look at it and say, well, we're not going to include it because it's not constant. It's not guaranteed. So they won't count it. We do. And oftentimes, you know, they think someone's over the ratios and they aren't for our program.
For Virginia Housing, we have one debt to income ratio, and so we have one number, and that's 45%. So for some buyers, depending on their loan and their comfort, their DTI or debt to income ratio could be 44, and it's just the house. It's not recommended, but it's possible. And loan officers, professionals will look at your entire situation, not just how much money you make, but also your credit, your savings, and things like that to see if that kind of DTI for the house alone is feasible. But definitely, consumers, do your due diligence, because what you are approved for is not necessarily what you are comfortable with. When the loan officer talks to you, they don't talk to you about the money you send your mom or the fact that your wife will kill you if you don't take her on vacation every year. But you need to keep those things in mind when you are choosing your loan amount with your loan professional. And there was a question about student loans and DTI. I know the student loans really crush DTI, debt to income ratio. But if you get with a talented lender like Brandon, there are some things that they can tell you to help you work within the system. Well, one, and not necessarily with Brandon, but if you think about it, if you use the program in Prince William, they're going to give you up to a 30% down payment. You've just reduced your DTI immensely. Not only that, but you took mortgage insurance off the table completely. So your DTI is lower than your neighbor buying the same house, right? And then when you add Spark and you reduce that interest rate by 1%, your DTI goes even lower, right? And then you use our grant money instead of borrowing the down payment, and your DTI goes even lower. And so it's a kind of stacking game that your lender will play to bring to fruition a loan program that works for you. Now, if you have crazy student loans, are you going to buy your dream house as your first house? No. This is your first investment property where you invest in yourself and you stop paying somebody else's mortgage and stop advancing somebody else's wealth. But it can be done even with student loans.
Thank you. Thank you so much, Regina. And I've got a great question again from the chat. That's a great segue to what you're talking about, is that how do you feel, and this is a question for everybody, all the panelists, what do you feel is the greatest stumbling block for renters to become homeowners?
I'm going to go ahead and start with that. No,
Okay,
please go ahead.
No,
No, I'll let you go ahead and then I'll come in after you.
honestly, I think it's fear. I think that's the biggest impediment. And like Angie said earlier, she's like, I prefer people call me to find out if they're eligible or not. We have too many renters historically telling themselves no before they even try. Trying is free. Nobody should charge you any money to apply for a mortgage, to get pre-approved. And so it just takes a little, thick skin in case they tell you your credit needs some work. You may not be qualified for your dream house, but it amazed me how many of my clients, my first-time home buyers, would come into my office looking confident, but not feeling confident. But when they leave with their pre-approval letter, then they let the secret out. We didn't think it was going to happen, So for me, that's the biggest hurdle to home ownership, not trying.
Yeah, and I would agree with Regina 100%. I think it's when you combine the fear with the fact that people don't even know where to start, in the process. Here's the thing. In real estate and in mortgages, people need an advocate. Okay, they need someone who's going to hold their hand, walk them through the process, not judge them, communicate with them, connect with them, and educate them. It's actually a natural part of just our human nature. When you have that, then you get that fear out, right? You get that fear out, and then the confidence comes. Even if the person's credit is not that good, that's fine, because the communication, the way that we communicate with people is say, okay, well, right now we need to work on A, B, and C so that in 3 months you're able to purchase a home, right? Not stopping people cold and discouraging them. And I think that's a problem, because we have to be willing to invest the time, right? And invest the attention that people deserve, for sure, because so many people can be homeowners without a doubt. And I think once that occurs and they see, wow, there's so many programs that are out there that are available for me and for my family, and this person, this man, this woman has taken the time to sit down and educate me and let me know, that absolutely, once they know that those opportunities are there, right, and those possibilities exist, I'm telling you, it's not just, remember, people don't know, they don't care about how much you know. They care about how much do you care about them? What can you offer them? You can have all the knowledge in the world. You can be an encyclopedia of knowledge about the Virginia housing and every single mortgage program. But if we don't connect with our clients, and if they don't really feel that we have their best interest in mind, they will remain fearful, because we're on the other side of the desk, right? So I think that's one thing where we also, this ties in very closely to the previous question with regards to diversity and inclusion, because it's not about, well, let me just create this program for African Americans or Latinos or East Asians. Not at all. Let's make no mistake about that. It's about, how do we help people to qualify for a loan? Has there been discrimination in the past? Absolutely. That's why you have a declarations page on page 4 of the 1003, because we want to know who's getting loans and who's not, right? And that's very, very important to get into, to understand the history there. But regardless of what your skin color is, I can promise you this, okay? If we can help you get your credit where it needs to be, teach you how to budget and save, give you the right timeline, educate you, and open up your eyes to what programs are available to you, it doesn't matter where you come from, what language you speak or don't speak, right? You can purchase a home. We help people on the regular who do not have a social security number. They have an ITIN, an individual tax ID number, okay? Purchase a home. It is possible, but they just need to know that it is possible.
Thank you, Brandon. And I have just
Absolutely.
a couple more questions directly for Regina and for Angie. Regina, we have a question from the chat. Will your office find me the best loan, the best loan for me, or will I have to figure that out by myself?
Well, you can call Virginia Housing and talk to us, but remember, you're not likely to get your loan directly from Virginia Housing. You're going to get it from a Virginia Housing approved lender. On our website at virginiahousing.com, you click home buyers and then you click find a lender. And there's a list of over 90 lending institutions in the state of Virginia with loan officers to help you. And we go one step further. We let you know who does the most loans with us, who has the most experience. So you'll see bronze, gold, silver, or platinum next to their names. However, our underwriting line is open to consumers. You call us, you're going to talk to an underwriter or a business development officer like myself. We're going to answer questions for you. Also, and I will add this to the chat, there's a website that our underwriting and tech department designed, and it's called our Lending Wizard. And the web address is lendingwizard, like a magical wizard, .vhda.com. lendingwizard.vhda.com. When you go to that website, you're going to answer about 7 questions. When it says jurisdiction, that means where do you want to live? Prince William County. And then once you submit that for information, thank you so much, Jessica, you're awesome. When you go to that website, you enter in jurisdiction, and then you're going to get a 3-page report. Page 1 tells you the loans that you're eligible for based on the information you gave us. Page 2 tells you the specialty products, the grants, the MCC, Spark, etc., that you're eligible for. And then the 3rd page is my favorite. It's the one that tells you what you can't do and why. I feel like once you tell me what I can't do and why, I know I can do everything else. So Lending Wizard at VHDA.com is a great tool. And it's a great tool to use to interview your lender. You can say, what do you think about this MCC with the conventional, because you've got it right in front of you.
Thank you, Regina. Before we move to the next part of our session, the second part of our session, we have just one more question for Angie. And Dexter in the chat wanted to clarify, Angie, that for the program in Prince William County, does the applicant have to work in Prince William County to qualify?
No, if they live here or work here, they have to be one or the other. So they have to work here or they have to live here. They don't have to do both, but they have to do one or the other.
Okay, perfect. Thank you so much. Thank you for answering all those questions for us. We are now going to move to the second part of our presentation. This has been a tough time for many home owners. Many people have taken pay cuts and lost their jobs and also struggling to find a new job. We now have Flor Salvador and Elizabeth Greco, who have joined us from Northern Virginia Legal Services to explain the resources to help us stay in our homes as well as avoid foreclosure. Thank you so much.
Hey, thank you so much, Irene. I really appreciate that. So let me just share my screen here. Alrighty. Okay, yeah, so I just wanted to start off with basically, we've heard all this wonderful stuff about becoming a homeowner, and we just wanted to present sort of the knowledge and the information in the unlikely event that folks might be missing a payment with their home or if they're renters, because we believe that knowledge is power. And the more you know, the better the choices you can make, especially when you're facing stressful times. And so again, we're with Legal Services, and we provide free legal advice and counsel to folks who are low income, elderly, or disabled. And we provide advice in the areas of housing, foreclosure, consumer debt, bankruptcy, family, and other things. Okay. Oh, and my colleague Elizabeth Krigo is going to be assisting me with this. She'll start on the second half. So just a quick overview, I will be discussing the homeownership and a little bit of the wealth divide and foreclosure prevention for homeowners. And my colleague Elizabeth will be discussing eviction prevention for renters, explain a little bit more about the eviction process and protections that currently apply to assist tenants. So this is a chart that I obtained from the Federal Reserve. And as you can see here, one of the things that it shows is home ownership and how home ownership basically rises with age. So the dark blue here is the white community. The yellow is the Black community. The lighter blue is the Hispanic community. And the greenish is sort of, it's other. They've combined. And as you can see, under 35, less people are homeowners. And the older you get, the more likely you are to become a homeowner. But you also see a disparity among minority communities as compared to white communities with becoming homeowners. One of the opinions that they believe might contribute to this disparity is just a disparity in wealth. It could be, for example, it states that parental wealth, like meaning your family, your wealth from your family and your parents, could provide help with down payment for the younger generations who might be able to or looking to buy their first home. And so if their parents don't have that parental wealth, or if they're not homeowners, it's more difficult to be able to obtain that type of money to put down towards a down payment. But as we've heard earlier today, it sounds like there's wonderful programs out there that don't require that down payment. And so this chart also shows that so among whites, Blacks, and Hispanics, that more white people have received an inheritance, for example, 29% compared to 10% or 7%. And the median inheritance, at least in 2019, was about like $88,000 to $85,000 or $52,000. And so, and you can see down below that about maybe 40% Blacks say that they can obtain $3,000 from family or friends, and about 57% Hispanics say that they can do the same. And so this sort of just goes to show that oftentimes owning a home can create generational wealth that can oftentimes, you know, if you sell it or if you leave it to your children in a will that and it's sold afterwards, that can help children like use that money as a down payment and purchase a home. And it can really help with increasing at least generational wealth. Okay, so on to foreclosure prevention. So typically the home buying process is very long and complicated. And when folks are in the closing stage of the home buying, they will sign dozens, if not hundreds, of pieces of paper. Two of the important things that they're going to sign is one, a promissory note. That's basically a promise to pay back the loan. The second thing that they sign is a deed of trust. The deed of trust pledges the house as security. So if for whatever reason, the home buyer should fall behind and, you know, the mortgage company finds that the loan isn't being paid, the deed of trust gives authority to the bank to appoint a trustee and try to force a sale or do a foreclosure of the home in order to get that loan paid back. And so what happens next? So if, let's say you entered into a loan that's a 30 years or 40 years repayment. So hopefully at the end of the payment plan, great, you become an owner free and clear. That's totally titled into your name. But what happens if we start missing payments or what's called default? Well, then that could be a risk. Now, I'm not saying that just by missing one payment, that's a risk, but that's sort of like a yellow sign, right? Yellow means yield, be careful. And so in Virginia, one thing I did want to mention is that sometimes folks will buy a home, but they won't take into account the fact that that home may also be in an area that has a homeowners association or a condo association. And by Virginia law, homeowners associations and condos associations, they can also foreclose on your home if people fail to pay them. And so unfortunately, sometimes we've seen that folks are up to date on their monthly mortgage payments, but have failed to pay their HOA or their condo association, and that puts their home at risk. And so that's also important to plan and make sure that you're paying those as well. Okay. And so basically what happens, for example, right now, if folks have missed a payment, right now, and there have always been historically, but now there's even more assistance for people. There's called like foreclosure prevention programs, and that can be in many different forms. It can come as a form like a forbearance. Forbearance basically means that your servicer or the bank, basically, they agree not to receive their monthly payments for a while to let you get caught up. And they can say, okay, we'll forbear 3 to 6 months or something like that. There's also loan modifications where the bank can decide to just modify the terms of your loan. So for example, if you have a 30-year loan and it's at an 8% interest rate, it can be extended to a 40-year loan, and that interest rate could be dropped to, let's say, 4 or 3% to make it more affordable. And people can also refinance. And typically, though, that's only available if you're up to date on your payments. And so finally, if for whatever reason, people are not able to keep up with the payments, then a foreclosure sale could occur. And in Virginia, it would occur through, I mean, there's 2 ways, but typically it's done what's called non-judicially or outside of the court system, where a trustee is appointed and the sale of the home is typically done in the front of the courthouse. Now, it can be done through the courts, but it's a little bit more rare. I've seen that mostly with homeowners associations or condo associations. So currently for COVID-19, there's a couple of really important foreclosure prevention programs for federally backed loans. So that would include like Freddie Mac, Fannie Mae, HUD or FHA, VA, and USDA. So they actually have a moratorium on foreclosures, meaning that they're not allowing folks who have loans that are backed by Freddie Mac, Fannie Mae, or any of those to have a foreclosure or go through the foreclosure process up through June 30th of this year. Now, they've been continuing that since last year, so they might continue that again. We don't know yet. We're sort of waiting to see if the legislation is passed to continue it. And also, these programs allow for a COVID hardship forbearance. So for people who've had a loss of income due to COVID, they've offered programs for forbearance. So for example, the forbearance programs include not accepting, not having to pay your loans for like up to 12 months, and it doesn't accrue interest, it doesn't accrue late fees and things like that. Now, what if you have a private loan? Well, there is no uniform prevention plan. So what that means is that you just have to call up your servicer. The servicer is basically the bank where you make your monthly payments to. And because whoever owns that loan, they have their own rules and the servicer will know. So what I mean by no uniform prevention plan, that doesn't mean that there doesn't exist. It doesn't exist. Most of these do have a foreclosure prevention program. It's just very different. You could go to Wells Fargo and they'll have a different plan than Bank of America and so on. And lastly, there's also been some legislation that's been issued to keep people in their homes. So there's been a 30-day stay of foreclosures if the homeowner is able to provide written proof of a COVID-related loss of income. And this protection lasts 90 days past the Virginia state of emergency. also, for a while, DHCD had been assisting homeowners with paying their mortgage. Now, they've run out of funds currently for that. However, under the American Rescue Plan Act, there's been at least $10 billion that was set aside to help homeowners who are behind on their mortgage and utility payments. And so I know that they've been discussing that there should be that assistance coming through soon, and we've just not heard yet that it's available. But we can keep looking. If folks are interested, you can keep looking online and look at DHCD to see whether or not that mortgage assistance is now available in the future. Okay, thank you.
Okay, so just talking a little bit about eviction protection. And again, we're doing this sort of from the perspective of, if you know about these things, it'll help you to be able to have good credit for the future, to be able to get housing, hopefully of your own sometime. So if we could go on to the next slide. Okay, so just a few statistics so that we know about how COVID has impacted our community. These are some statistics showing what the eviction rates, versus COVID-19 cases and unemployment issues have been in various areas in the Northern Virginia region. And if you look at this, it's kind of sobering, because Prince William has had, in many places, the highest impact. So for example, the highest eviction rate that's on this list is Prince William County, 22191, that top line, that was in 2019, that was the eviction rate. Now we're seeing these days that with COVID and the protections that have been involved in the eviction moratorium, that it has not been nearly at that level. So there have been protections, and they have had an effect. And just looking at those rates for the COVID-19 cases, again, that is very high in Prince William compared to other areas, as well as the unemployment issues. So these are just things to think about when you're looking at, so if you know that you're having a hard time, you're not the only one that's doing it. Next slide. Okay, so we just wanted to give you a sort of primer on just really quick overview of the types of evictions, because the type of eviction matters as far as what COVID protections you have. And the main one that we like looking at for that is non-payment of rent. And it's important to distinguish that from the other two types of evictions, conduct and a lease termination. For a conduct one, you should be getting a 2130 notice or a 30-day notice if your breach is irremediable. And for lease termination, you get a 30-day notice prior to the next rent due date in most cases. For a non-payment of rent, we'll see that is a shorter time period of notice, but there's also a lot of protections involved in COVID. Next slide. Okay, so the eviction process, aside from the notice requirement, is the same no matter what type of eviction you're facing. So for the non-payment one, it's a 14-day pay or quit notice. Usually that's 5 days, but it's 14 days in COVID, and that's for a reason. And we'll go over those specific things that have to be in that notice. For a breach of the lease, or it's 2130 or 30 days, as I said, terminating is 30-day notice. And then after that notice, the process is the same no matter what. The landlord files the summons of unlawful detainer in the general district court. There's a court date. There might be more than one if you appear at the first court date. There's a 10-day appeal period if a judgment is obtained in court. And then after that appeal period, a notice of eviction would be processed and sent to the sheriff's office, and the tenant might be able to redeem up to 2 days before the scheduled eviction. So even after all this process has gone on, you still have the opportunity to work it out. And then the sheriff would conduct the eviction. There's no self-help eviction allowed in Virginia. We want to make that very clear. So that process, think about all those steps, it actually takes a long time. So even though you're getting a 14-day pay or quit or even a 30-day notice, it's going to be a little bit more than that if the tenant doesn't have anywhere to go before they're going to be kicked out of their home. And a lot of people get worried about that. So you still want to take it seriously, but the landlord cannot just kick you out without any process. And that's important to know. Okay, so looking at this is the summons for unlawful detainer. And we just wanted to show this to you so that you know what it is. So if you look on the upper right-hand side, that's the hearing date and time. That's important to know if you want to appear in court and protect yourself. But most importantly here, I wanted to point out the middle where we've highlighted. That's where you look and see if you are facing an eviction for unpaid rent or for something else. If the unpaid rent box is checked, then all of these protections that we're going to talk about apply. Next slide. Okay, so for non-payment of rent, and this is in the case of COVID, this is even without COVID, this was happening before, you have the right of redemption. And the right of redemption means that you have, even after the landlord has filed the unlawful detainer, you are able to pay and still get that thing dismissed, or you won't get evicted from your home. And you can do that in two ways. You can do a redemption, or you can do a redemption tender if you're getting help with your payment. And that's basically saying we've gotten a commitment from a government agency to pay, and then the case gets postponed to allow for that payment. The landlord is required to give an accounting of the amounts due when you request it, so that you can redeem, and that's important too. And this right has been extended in recent years to allow for even past the court date. You can still redeem up until 2 days before the sheriff appears to kick you out of your house. And so you would want to make sure you pay, you would want to make sure and let the landlord know, let the sheriff know. And this right to redeem doesn't have a limit anymore. It used to be limited to once every 12 months. Now there's no limit on your ability to redeem. No matter how many times the landlord tries to sue you to get you out, you can still pay and get it done. And except for the landlord with 4 or fewer units, so smaller landlords can limit it to once every lease term. And now we're getting into the specific COVID protections that have come about. And so the first one is that instead of a 5-day pay or quit, a landlord for non-payment of rent, a landlord has to file a 14-day notice. And that 14-day notice has to have specific notifications in it. So it needs to let you know about the Virginia Rent Relief Program and how to reach 211 Virginia. It needs to let you know about that the landlord will apply for rental assistance if you don't do it, and that the landlord has to cooperate with you. And if the landlord owns 5 or more rental units, which we usually see with bigger apartment complexes, the landlord has to provide written notice offering you a payment plan without late fees. So we can go on. For the rental assistance, the landlord must give the tenant the opportunity to apply for rental assistance or apply for them before taking action to evict for non-payment of rent. And I also want you all to know that you can do this even before the landlord threatens to evict you. So if you're seeing that you're falling behind on your rent and it's because you lost income or you had issues because of COVID, then you can go ahead and apply for this rent relief program. And the website is listed right there. The landlord has to provide some documents for it. And under the law, the rental application has to be approved within 45 days of the date that all materials are received. And we're seeing that this is actually a much shorter period right now. But they're not allowed to take any action until that 45-day period has passed. And it's from the date all the materials are received. And so if the landlord hasn't provided materials and they said, oh, it's been 45 days, then you can say, well, it's because it's not completed. And many applications are being approved for future months of rent. And it's really important for you to know that the landlord can't evict or terminate the lease for a month when they've received assistance for that month. So even if they've accrued attorney's fees or something like that, if they go through this program and they get rent for that period, then they can't evict you. The money is a grant, it does not have to be repaid. And we're hopeful that sometime in the future that the process is going to be changed. We're hearing that it's going to be changed to allow a tenant to apply without the landlord's help, which might help to speed the process along a little bit. For the rent relief program, there have been some disparities in how some of our populations have been served with this. And a lot of that has to do with just hesitancy on the part of tenants to get involved in rent relief. Maybe they don't trust that that program would be good for them or would help them. Maybe they think that the government would get involved in some information. So we want it to be clear. And you can see here that Black households have gotten a little bit over 50% of the applications, and whereas Hispanic households have only gotten about 10%. And we want it to be clear that this is a good program to apply for, that there's plenty of money to help you. There's not going to be any questions about any immigration status is not a question here. You're not going to get in trouble or anything like that. They're just asking for a lease and for and to know that you've lost income because of COVID or you have some issues with paying. And that's really all that needs to go into that. COVID protections, another one is the payment plan. As I mentioned before, if the landlord has 5 or more units, then they're required to offer you a payment plan, and that has to have specific provisions in it. Like it needs to pay it off within 6 months. It doesn't have late fees. And then they have to give you an extra 14-day notice if you do default on that payment plan. So that's another protection that's in place. You can also ask for a 60-day continuance. And again, this is going back, it's important to appear at that first court date. And that first court date is when you have the opportunity to ask for the 60-day continuance. And this is going to end 90 days after the state of emergency ends. So if the state of emergency ends at the end of June, like we're hearing it might, then you would have 90 days after that to continue to ask for the 60-day continuance. So going on to the CDC moratorium, which has kind of been the big one that a lot of people have known about. The reason for that has a lot to do with some of the things that have gone on with COVID. So the CDC data shows that Black, Latinx, and Native Americans infected with COVID-19 are 4 times more likely to be hospitalized than other races. Black and Latin American people infected with COVID-19 also died at disproportionately higher rates. And the research has shown that lifting the eviction moratoria led to a 40% increase of COVID-19 contraction. And it's for these reasons that the CDC moratorium has been in effect, and it's important to keep it there. So what is the CDC moratorium? It's a moratorium on carrying out eviction for unpaid rent. Again, only unpaid rent. Those other evictions don't apply. And now it's through June 30th, 2021. You don't get this automatically. You need to complete a declaration and provide it to your landlord. And that declaration has to have specific things in here that are listed here. You have to use best efforts to obtain government assistance for rent. There are certain income requirements that most people that aren't able to pay rent meet very easily. You just certify that you're not able to pay due to substantial loss of household income or extraordinary out-of-pocket medical expenses. And those medical expenses, that household income does not have to be related to COVID. That's not in there. So you just have to show that you did lose income and that you've used your best efforts to pay partial rent and that you've likely become homeless or forced to move into close quarters with others. The important thing with that partial payment of rent, that can be a tricky one. Some landlords are pushing against that. The bottom line is that if you have other expenses that are making it impossible for you to pay rent, even if you haven't made any partial payment of rent and you can show that you just don't have enough money to make all of your expenses and something had to go, then that should be sufficient to show that particular element. And we just want you to know that the moratorium is still in effect. There have been court decisions challenging it. And right now those things are stayed and there's an appeal in process. So the moratorium is still in effect and you should be able to still use it. There are so these are protections for when you're looking for new housing. And this one right now is just for COVID related things. And it is only for if you're trying to get rental housing. So this isn't necessarily if you're trying to buy a house. But it basically says that if you lost, if you were faced with eviction, or you were or you couldn't, or non-payment, even if you got evicted for not paying rent due to COVID, then that can't affect your rental application. And the landlord has to let you know about your right to that. They have to give you the opportunity to challenge a determination that you don't get housing. And there are certain damages that you would get if you were able to prevail in this and you showed that the landlord didn't follow this procedure. And this one, the expunging dismissed eviction cases, is not necessarily just for COVID. This was in place before all of this came down. And this could have an effect on you, whether you are looking for new housing to get a rental, or whether you are trying to have your credit good enough to get a new house. Because a judgment on your record can affect your credit, and it can affect your ability to obtain housing. And so what this is saying is that if you got a lawsuit, you weren't able to pay before the lawsuit, but then you redeemed, or you were able to get it paid through the rent relief program or something like that, and the matter was dismissed in court, then you will get that record dismissed. So it won't even appear that you were ever sued. And that's really important. And that'll happen automatically beginning January 1st, 2022. And so some of these are the protections that are available for you based off of COVID, and in order to help you to have a good record and be able to buy a home or get housing in the future. And we just want to let you know, if you are facing any legal problems, we hope that you're not, but if you are, please feel free to call us and go through intake to see if you qualify for assistance with us, and we'd be happy to help.
Thank you. Thank you so much for that amazing, awesome presentation, Flo and Elizabeth. Lots of great information, offering a lot of hope to, I'm sure, many people that need to hear that right now. I'm going to now open up the floor for some questions and brief questions and answers. I do have some specific questions for Flo and Elizabeth, and one more for Brandon. So if a person is, the first question from the chat was, if a person is facing potential eviction and they know that potentially, they might be evicted, what would be your advice of the first step to take? And that's for either Flo or Elizabeth.
I think I would say, I think it just depends on the type of eviction, right? Like we said, if it's an unpaid rent case, I think the first thing you need to do is apply for rent relief. If it is something else, then you need to maybe see if you can get legal counsel. I don't know if you have anything to add to that.
Yes, thank you for that. Yes, I absolutely agree with Elizabeth. I think that if it is for non-payment of rent, or you might be behind, the first thing is to start applying for rent relief, because it can be a lengthy process. And again, like it's free, it's a grant, you don't have to repay it, and that'll stop the eviction train from coming, like if it's for non-payment. If it's for something else, it could be a little bit trickier. So my thought is to call legal aid and see if you're eligible for more advice. But just off the top of my head, so for example, sometimes you might get, like Elizabeth was talking about, eviction for conduct, like it's called a 2130. So for example, sometimes that happens where people might have too many, too much stuff in the entryway or the bikes or the windows, and they say it's a code violation. And so they say you need to get that stuff out of the way within 21 days, or else the lease will be terminated within 30 days and will evict you. I think if it's something like that and you've complied, you've done what you needed to do within those 21 days, it's important to respond in writing that you've done it. so that within 30 days, they're not trying to terminate the lease. Otherwise, how will they know that you've complied? I think that's, yeah, but everything else is a little bit trickier. Yeah, thank you for that.
Thank you, Flo. You talked about HOAs in your first slides. We do have another question regarding HOAs. Do they provide any assistance with the HOA fee or forgiveness during COVID?
That's a really great question, and it breaks it breaks my heart that unfortunately there has not been legislation putting aside money for homeowners association assessments or condo association assessments. When I've noticed the legislation and things I identified, oh no, this is going to be a problem coming down the pipeline. But unfortunately, there isn't any federal assistance that's trickled down to Virginia. And Elizabeth, I don't know if you have anything else to add, but I'm not aware of any, unfortunately.
I haven't heard about anything either. I do know that there's a lot of agencies and nonprofits and stuff that are trying to work on paying things like utility bills. And I'm sure that HOA assessments would be included in there too. But yeah, it's not going to be an organized government program like we have for the rent relief or anything.
Okay, thank you for that. And then a question for both of you. What specific services does your organization provide?
Flora's the senior person on staff, so I'll let her handle that one. I could say something, but I'm sure she's got a little bit more of a comprehensive.
Yeah, no worries. Yeah, so for folks who are eligible, we provide like a range of services. Either it could be advice or brief services, meaning like drafting a letter or something like that, all the way to full representation in court. And so it's just the gamut. It can be as quick as advice or the full thing through court, or even appealing it if necessary to a higher level. And again, it's through like the whole range of the types of service areas that we assist with. We assist in Prince William, we have a Loudoun office, Fairfax, Arlington, Alexandria, and a sister agency we work with in the Rappahannock legal service area. And again, in the full range of things is housing, consumer, elder, education law, bankruptcy. We have a low-income tax credit clinic. We have an attorney who does anti-human trafficking work, family law, protective orders. And so it's quite a lot. If anyone's interested, I would suggest look at our website and see if we don't do, unfortunately, criminal or immigration law, though.
Thank you, Flo. I have another question from the chat. Will there still be interest assessed during the forbearance?
Yeah, so good question. So initially for the forbearance, at least for like FHA and those, one of the requirements under the CARES Act for those 12 months, one of the CARES Act requirements is that interest above what regularly would have accrued anyways cannot be charged. And so if there's now, because it's been continued and expanded, I think it depends on which program you get or which program you're looking at. But most of the ones that I've seen still are not charging like interest above the regular interest rate that normally accrues.
Thank you. And I have another question from the chat. This one says, if I receive an eviction notice that I believe is unfounded, how do I address this? Do I have to go to court and explain?
So it depends on what level you're at. So a lot of times people will think that the 14-day pay or quit or the 2130 notice is their eviction notice, because it does say that action will be taken to evict them if they don't comply with it. If you don't agree with what's being said in it, and it's at that level where you've just gotten the letter that says, pay or quit or something like that, then you would address it with your landlord because it's not in the court yet. But if you've gotten that unlawful detainer summons that I showed the picture of, then yes, you need to be in touch with your landlord and appear in court. And have whatever documentation that you need to show your defense so that you can make that defense. And if you think that you need a little extra help, feel free to reach out to us. But yeah, it's very important to appear in court when you've got that summons.
Thank you. And this next question from the chat is really a question for all our panelists. What do you find are the perceived challenges that are more easily overcome related to home ownership or preventing eviction? So that's for anyone really to answer. Thank you.
Well, I'll mention the home ownership. A lot of the, most of the people that call, they're paying $1,600, $1,700 per month in rent. And they're under the misconception that because if they go into home ownership, it's going to be more than that, where it's actually the opposite. A $300,000 house and their mortgage payment is like $1,400 a month. And that includes taxes and insurance and HOA fees. And sometimes the landlords will tell the tenants that, you can't afford this, and because this is your rent, and it's going to be a lot more to buy. And people do believe that. I get calls from folks that say, well, I really can't afford. And I said, well, yeah, you can, because you're paying more than what the home ownership, to own a home, paying your mortgage payment. So a lot of it is just the lack of education, or they're given misinformation by their landlords.
Thank you. And the next part to that question was about preventing the challenges for preventing eviction.
Yeah, I mean, I think that the most important thing is that there's three reasons for getting evicted. Is one, if you're not paying rent. Second, if you don't have the conduct, you're not complying with the lease in some way, you're not maintaining the property, or if your lease is terminated. And that last one you can't really do very much about, because if the lease terminates and your landlord decides that they don't want you to stay, they don't have to have a reason for that. They can just decide that they don't want you to stay, and then you're out, as long as they've given you the right notice. But those first two, keeping up with your rent payments. And again, the RRP is available even if you're not being evicted. So if you see that you're going to have a hard time paying rent next month, then maybe get on top of that even before your landlord mentions it to you. And the other thing is that the conduct, just do your best to maintain the property, to be in touch with your landlord if there's any issues or anything like that. And that's how you can kind of stay on top of and prevent eviction as much as you possibly can.
Thank you, Elizabeth. And we've had a request from the chat. If you could please post a link to your website for the information for the Flo and Elizabeth. Thank you. And I have two more questions before we close up the session. This is maybe potentially for Regina and Brandon. Someone was asking, what's a conventional loan? Is it a private loan?
Is a conventional loan a private loan?
What is a conventional loan, and is it a private loan?
Got it. Okay, so number one, conventional loans and private loans are not the same thing. Very, very different, in fact. Conventional, if you just look at the definition of the word, it's just pretty normal, standard loan, traditional loan. But if you want to associate it with something these days, it would be more associated with Fannie Mae and Freddie Mac. Okay, they're very normal, run-of-the-mill type of standard loans. That's a conventional loan. A private loan is something that's very different. It can come from an individual, or it can come from a non-bank, a non-depository, where they have different lending standards that are going to be different than a conventional loan, where you can purchase a home for sure, but it's going to be a completely different set of standards.
Thank you. Thank you. Thank you. I have one more question in the chat for Flo and Elizabeth. Does LSNB help create wills or trusts?
Yeah, so we also have elder attorneys that help people draft their wills, powers of attorneys, and advanced medical directives, but we don't do trust.
Thank you. Thank you for that. So that brings us to the end of our session on affordable home ownership for today. I would like to thank everyone for joining us this evening and all of the great information that we have received. It's definitely has been a very informative session. I'd like to invite everyone to join us for our next session, which is on June 5th. That would be the third session in in our series of 3 sessions. And finally, I'd like to also thank our distinguished panel for the evening: Angie Bassett, Regina Pinkney, Brandon J. Thorpe, Flo Salvador, and Elizabeth Greco. Thank you for sharing your expertise with us this evening. Please have a wonderful evening. Thank you so much. And I'll now turn it over to Andrea. Thank you, Andrea. Andrea, are you with us?
Me, so I will go ahead and end the meeting for everyone. Thank you for coming.
Thank you very much.
Thank you. Bye.